Hello traders, welcome back to another episode of the weekly watch list. Last week, Fed announced a 0.75 basis point rate hike as we expected, but the other part was not so expected by the market, and the market reacted accordingly. Now, Jerome Powell was vague about the future rate hikes while the treasury market is facing the liquidity problems. Now, the bond market is bigger than the stock market. If you guys want to know more about what can happen in worst case scenario, then just watch any good video that is available on the British bond market as they came very close to an economic disaster. Also, the whole market is completely out of sync. What I mean is, usually VIX, which tracks the volatility, is inversely proportional to the stock, and along with that, the dollar behaves exactly the similar manner. But it seems like most of the market is moving in the same direction along with VIX and dollar. Now the market has no liquidity, no big players participation, and no direction. Now, November and December months are usually the months when the Santa rally starts, but that also looks a bit uncertain at this point based on all the market conditions. So without any further ado, let's get started with this week's watch list. Now, starting with the Nasdaq. Nasdaq is in sideways trend, and as I mentioned in my previous video, it's still in the box between 10,695 to 11,712, and it showed a glimpse of upward bias, but that momentum is not continuing. Now it feels like the market is fighting against the immense downward pressure right there in this region. Still, Nasdaq didn't break below this box. It held its price within this box, which is a good thing. Now with the current condition, if we get any sort of rally, then that rally will face a bit of resistance around somewhere within this region, that is 11,150 and 11,288. So these are the two regions which you need to watch carefully, because we are in this channel and probably at this region we will see the resistance as we reach to the upper trend line of this channel. Moving on to S&P 500. Now S&P 500 is also looking similar but has more defined megaphone pattern compared to Nasdaq. It got rejected around 39.24 right over here. As I mentioned in my previous video, within this box it got rejection exactly at that point, and now it got bounced from this another support level that I draw over here between 3,599 and 3,703. It got bounced and it looks a little bit promising, but watch for these two levels at this moment, which are at 37.98 and 38.29. But most probably, if we get any sort of rally, we will try to push towards 4,000 level, and we need to watch how market behaves at that point. Right now, all these indicators are pointing that we will get some sort of rally in upward direction. Probably we will see close to 38.50. At that point, it will reach to this point where it will retest this upper resistance of this megaphone and probably break through it and retest this 200 period moving average. At that point, this 200 period moving average will come close to this 4,000 levels. So all the analysis is pointing to S&P 500 pushing towards 4,000, considering all the market conditions will remain stable and bullish. Moving on to dollar. As I mentioned in my intro, the dollar is not in sync with the rest of the market. The dollar dropped straight from 112 to 110, but still didn't get any bullish reflection or momentum boost in the market. The dollar is looking weak, so it might pull back to 109. So these two levels, like around here 109, and followed by the next one will be somewhere around 107, and I hope that drop in the dollar value will give it a time to be in sync with the rest of the market. Let's see what happens. Moving on to VIX. VIX is also out of sync, as I mentioned, with the rest of the market. Now the drop in VIX is not unusual, but it is not reflected in the stock market. If you see the stock market was moving in sync with the VIX, which is highly unusual. Also, VIX is below 200 period moving average and all of its moving average. It might drop as low as 2265, or in worst case scenario for VIX, it might drop to 2027, and from there it will bounce back again as it is approaching to heavy support zone in terms of VIX. Moving on to Apple. Now Apple plunged big time on Friday, and it was quite surprising. The head and shoulder pattern that it had, or that I drew previously, it's kind of intact, but it's barely intact at the same time. There is a high probability that it might fail completely if it couldn't hold this 136.21 level. Now on Friday it dropped below 135 and or close to 135, and then got a bounce back, ended up somewhat bullish by the end of the day. So what it means is, like, if we get any kind of push, Apple will push towards 140, 142. At that point it will enter into this gap fill, which exists between 142.41 to 145. Moving on to Amazon. The plunge in Amazon on Friday was really astonishing, and it started constant bleeding. Now 86 level provides a good opportunity for, or the good amount of support for the Amazon, so expect a bounce from this level to retest this 96 and followed by the 100 101 level. At that point it will face some resistance. It might break through it and enter into this gap fill, which exists between 104 to 110, but everything points that we will get some kind of like a bounce. Also, it's in this megaphone formation at the bottom of this trend line, so that might also give some bullish momentum towards the upside. Boeing is a stock that always moves erratic and it's hard to predict. Now, despite bad earnings, it pushed as high as 160, and right now it is retesting 200 period moving average, so that's very significant. It was respecting this 200 period moving average for the past few events where it retest or try to break through 200 period moving average, and again we are at that position. So expect a rejection, and if it acts a little bit weird, then probably it will break through it to 164 followed by 173. If we get a rejection, then this trend line will be the best place for it to come back and retest, or in terms of price action, 143.89 will be the good target for it to come back down and retest. CVS is the another one that ran up high after earnings. The major concern over here is that, similar to Boeing, it is at its 200 period moving average. Now the difference between Boeing and CVS is, like, CVS broke through this 200 period moving average on its last earning, and it might do so in this case as well. If the bullish momentum continues, then probably it will break through it and retest 102 followed by 103 something. If not, if we get a rejection, then there are two levels to watch for, that is 97.67, 95.68. Moving on to FedEx has this unique formation. As you can see here, this is a symmetrical triangle formation that is leaning towards bearish side, but it can break on the both side as well. Most of the time when you get this flag, the pole of this flag or this symmetrical triangle is bearish, so there is a high probability that it will break towards the downside according to the technical analysis, but it might break above as well because it is kind of like away from this 200 period moving average with this big gap to fill between 165.44 to 200. So if the consolidation, if it keep consolidating within this range, then there is a high probability that it might break towards the downside, and very less probability that it will break towards the upside. On the upside move, watch for this 165.44 where it will start entering into this gap fill. Next one is General Dynamics. General Dynamics is forming a classic head and shoulder formation. It is getting top heavy, so you can see the rounding action is started forming over here. What it means is, like, if we are going to get a pullback, we might retest this 10 period moving average first at 247, followed by this 21 period moving average, which will catch up eventually to this 243 level. If we get further downside, then watch for this like a 200 period moving average, which is at around 232, and before that we have this 40 days moving average, which will come close to 240 at that point if you see the projection of with this current direction. Next one is Google. Now Google has similar price action, exactly similar to Amazon. It dropped massively on Friday. It is testing its support at 85.49, got a bounce back on Friday at the end of the day, so that's a bullish sign. Also, it is below all these three moving averages. Most of the stock like to be in touch with 10 period moving average, so in case of Google, it might push back towards 92.83 in case of if we get any kind of like a upward momentum. Next one is LMT. European war brought some bullishness to the stock that are in arms manufacturing. Now, the similar to General Dynamics, LMT also has this head and shoulder formation. Its head is not completely rounding off, similar to General Dynamics. It has this choppy but sideways action, so probably it will continue for a few more days and then it will break down. The first level to watch for in that case is 474.74, followed by this 0.786 retracement of this move that is at 468.37, and in case if we decide to complete this head formation, then the next target will be 445.33 for its pullback. NVDA is having a nice megaphone formation, as you see here. It is kind of like shrouded or hidden within this all trend lines or the support lines, but that formation exists over here. Now it got a rejection over here, and we are at that point in terms of NVIDIA. Now NVIDIA's earnings are coming up on 16th November, so that might act as a catalyst to push it a little bit higher to fill this gap between 145.37 to 150.12. Beyond that, I'm not seeing any possible viable reason that it might break above 155 and reach to 160. Probably it will go fill this gap and then pull back again within this support zone that is exist between 125.39 to 143.28. Raytheon Technologies have a beautiful cup formation, and that cup formation is almost textbook perfect. It seems like it completed this cup formation, so if we get a rejection, then it will start forming this handle, and watch for the first target will be the 93.18 and followed by the 10 period moving average retest, which will happen exactly at the same time, probably with 200 period moving average. And then if this 21 period moving average will catch up, then that handle formation will be completed around 91 or 90. Next one is Tesla. Now Tesla was disappointing. Similar to Apple, it had this small head and shoulder formation, but that formation is completely broken down or invalidated when it lost its support at 216. Now it is trading at 207.47. Now this 200 level is a massive support for the Tesla stock, so it might push back higher close to 234 to 45 of the which is a 0.382 retracement of this move. Just keep an eye on this Tesla. If Tesla lost 200 support, then probably that will be a bad scenario for Tesla stock as it will start plummeting down towards 150. Now the next one is a UPS. Now UPS is having this diamond bottom formation. In terms of technical analysis, this is a bullish pattern, but I have seen that this pattern broken to the downside. In this market condition, anything is possible, but I am more bullish in this scenario. If UPS broke to the upside, watch for the 180 level, which is exactly where it start entering into this gap fill between 179.04 to 185.24. If it broke to the downside, then the ultimate level to watch for is 155.58, where it has a decent support. If it loses that value, then there is a thin support at 144.91. Otherwise, it will start plummeting down towards 121.11, which will be a disaster for the UPS. And the last but not least is Walmart. Walmart broke nicely from its falling wedge and got rejection when it started entering into this gap fill between 143.66 to 146.47. Now it is hovering over here. It might consolidate for a while before coming down to retest this 200 period moving average. It respected this 200 period moving average fairly, not decently but fairly, and it likes to hang around that level, close to that level. So we might see a push back towards the downside and retesting of this 200 period moving average around like 135 or 134 in in that case. So that's it for this video, guys. If you like the information presented in this video, then please like, share and subscribe. Thank you for watching and see you next week. Bye.